Welcome everyone to today's webinar on funding your business. This is Heather Rosen and I'm here with Christine Hansen from FranFund. I'm going to post my contact information in the chat box right now. Also in the chat box, you will see an evaluation form. We would love your feedback. As one of our participants says, feedback is the breakfast of champions. We've been doing these programs for a little over a year, and we want to continue to improve them and make these as valuable as we can to you. So please fill out that evaluation form in the link that you see there. But if you have questions today, you feel free to type them into the chat box, and Christine or I, probably Christine though, will attempt to answer them. So with that, I'd like to introduce Christine Hansen. She works for a company called FranFund. As you know, many of you know, I've been in this business for over 11 years, and I've known FranFund for that entire time. They're not part of FranNet. You'll see that a lot of companies in the franchise industry have Fran in them, but they're not related at all. But we have been recommending them forever, and I have been recommending specifically that people talk to Christine for a very, very long time. And I've got some clients right now actually who are getting some really good advice from her. So I thought this was a really good topic to bring to you. First of all, because there are a lot of different ways to fund a new business, but also because the funding landscape is constantly changing as a result of some new legislation that provides incentives in some cases for people to borrow money and go into business. And so with that, I encourage you to just listen carefully, type general questions into the chat box, but if you want more specific advice for your current situation, let me know that on the evaluation form, and I will put you in touch with Christine, and you can tell her what you're trying to achieve, have her talk to you about your current asset and liability situation, and let her give you some very specific customized advice. And with that, enough talking from me. I will turn this over to Christine. Thank you so much for being here today.
Well, thank you so much, Heather. We appreciate the opportunity and that warm welcome. So good morning, everyone. Thank you so much for joining us today. As Heather mentioned, one of the biggest piece of the process while working with Heather is funding. So today's webinar is going to focus on some different ways for you to fund your potential new franchise. So we're going to get started. I know Heather did a really great job with welcoming me to the webinar, but I'm a senior funding consultant with FranFund. I've spent almost a decade in the franchise industry in one way or the other. And really my goal is to help you give you the most funding options that make the most sense for your specific situation. That's really our goal, because we know everybody's situation is unique. As Heather mentioned, we've been working with her for years, and she's definitely an expert in her field. And while you go through her consultative process to find the right business, one of the questions that you'll probably ask her, or she might bring up to you, is, well, what are my options to fund a new business? So today, really our goal is to give you some ideas that you may or may not be aware of, and really give you the most up-to-date information that's out there. Just a little bit about FranFund and who we are and what we do. We've been in the franchising space for almost 15 years now. Our organization was founded by a veteran in the franchising space. They had experience in franchise development, sales, operations, franchise ownership, and they really understood the needs that folks would have if they wanted to start a new business, and especially when it came to funding. Our company is headquartered in Fort Worth, Texas. We are a proud IFA supplier. For those who are not aware of the IFA, it's the International Franchise Association, who is tasked with ensuring favorable outcomes for franchisees and franchisors. So we're definitely happy to be affiliated with that. We've also been voted the top funding supplier in the Entrepreneurs Franchise Supplier Ranking and have been ranked in that for the last 3 years. And this was actually voted by franchisors. Those folks, those franchisors really understand the importance of franchisees to have strong funding strategies to execute franchise ownership. So that was definitely something we're excited about. Also, too, we are a very proud to be veteran friendly. I mean, we're part of VetFran, which is also an initiative from the International Franchise Association, who help encourage and incentivize our military veterans to become entrepreneurs. So we're definitely proud that we're associated with that. And we do provide some special pricing available for veterans as well. That'd be happy to share with you all on a one-on-one basis. So as mentioned, we're going to discuss today some different ways to fund a business. Whether you are looking into becoming a new franchisee, or maybe it's an existing franchise that you're working with Heather on, these options may be applicable to you as well. So some of these options you may be familiar with, some may be new concepts, but they typically fall into these 4 major categories. The first category here is going to be equity funding. So equity funding is a situation where you are wanting to bring on a business partner or investor that provides you with the capital you need to fund your franchise in exchange for ownership equity. The next bullet point option here is asset-backed funding, which includes equipment leasing. So maybe you have a franchise that it has a heavy need for equipment. We have some resources that, of financial institutions that help with that. Or if you do have non-retirement investments like a portfolio or securities, you actually can get a line of credit against those account investments. So we can talk you through ways to explore that option if it's applicable to you or not. Another common funding option is debt funding. And that includes credit cards. Maybe you're using a home equity line of credit or want to refinance your mortgage. But it also includes a very popular funding option, such as SBA loans, which we'll get to in our presentation today. And then the last category is self-funding. Cash is a very obvious option, but there's also a program out there that you may or may not be aware of, and it's an IRS regulated program that will allow you to access some of your retirement funds, whether it's a 401k, IRA dollars, to invest into a business. And that's actually what we'll touch on during our first deep dive here. So here at Fran Fund, we do call this program the Fran Plan, but the formal name is the Rollover for Business Startup Program, also known as the ROBS program, or ROBS. This program is governed by the IRS and Department of Labor and has been a part of the Internal Revenue Code since 1974. So it's been around for some time. This is not something that Fran Fund or any other organizations have created to get around any rules or regulations. But what this strategy allows you to do is access money that you may have from a 401k, maybe from your previous employer. Or maybe you are a veteran and have a thrift savings plan. Or maybe you've worked for a nonprofit and have a 403b. Or maybe you just rolled over your funds into a traditional IRA. But what this program allows you to do is access those funds and invest them directly into your new franchise without having to pay income tax or early withdrawal penalty for touching those funds. So you're probably wondering, okay, well, wow, how does this program work? So let's talk about it in steps. So the first step would be for us to create your new operating entity for your franchise. With this specific program, it does have to be a C corporation. And the reason being is because this program is just a non-prohibited transaction, not available through an LLC or S Corp structure. So you would have this new C corporation, which would be your new operating entity for your franchise. And once that's in place, step 2 is for us to create a new 401k plan. And this new 401k plan will be sponsored by your new C corporation, your new franchise. So step 3 then will be rolling your existing retirement funds from the existing plan it's sitting in into this new 401k plan that FranFund has created for you. So instead of using those funds to buy stock in Apple or Amazon, essentially step 4 is having this 401k plan use the funds to purchase stock into this C corporation, which so happens to be now your new business. So when all is said and done, the new 401k plan will now own stock into the new C corporation, and the C corporation now has the cash for you to use for any legitimate business expenses along the way. Maybe that's the initial franchise fee that you would need to pay to the franchisor to secure your territory. Maybe that is for marketing, training, equipment, working capital, build out, any legitimate business expense. So when you follow the trail of the funds for this funding strategy, these funds will be funded into your business bank account, not your personal bank account. So that's why you're not paying any income tax or early withdrawal penalties, because you're still making a qualified retirement investment through this funding strategy. And you are investing these funds in the stock of your own business versus putting the money out in the market like you're used to seeing today. So what are some of the benefits of doing this funding program? I think some of the major items are listed here, but this is not a loan. So you're not creating any debt. You're not borrowing from your retirement funds, so there's no loans to make. There's no interest rates either. And without making those monthly payments, you may have the opportunity to cash flow sooner, because these are retirement funds that you have saved. There's no application or approval process that you need to go through. Your credit score is not a factor either. So this is truly your decision to make. Now, if you are in a position where you are considering to borrow money, say by utilizing a business loan, which again, we'll get to on in our presentation today, in addition to utilizing your retirement funds, that combination strategy is actually very common and acceptable to get you to the total amount you need to fund your new business. So a very common question that I get pretty much every day is, well, why don't I just take out a distribution or, just take out a withdrawal? Well, here we did a very simple illustration on the differences between the two. So we're going to say that you have $150,000 in a retirement plan. So when you utilize the FRAN plan, also known as the Rollover for Business Startup Program, because there's no early withdrawal penalty or income taxes associated with this program, you can see here on the left side of this screen, you would ultimately get access to the full $150,000. Now, on the other end of the slide, if you were to take out a distribution, which is a withdrawal from your retirement plan, and if you are under the age of 59 and a half, there would be a 10% early withdrawal penalty. And for this example, we did assume a 30% tax bracket. So if you took out a distribution, you would end up with $90,000 available versus the full $150,000 if you were to do this program. So we're going to switch gears a little bit, and we're going to talk about another very popular funding option that's out there today and get you all up to speed on today's small business loan environment. One of the things that is important to know is that when banks today are writing loans for small businesses, it's almost exclusive to SBA loans, and SBA stands for the Small Business Administration. These loans can go up to $5 million, depending on the needs of the business itself. It is possible to go through a non-SBA loan, such as a conventional loan, but that is primarily for folks who are multi-unit owners. So maybe you're working with Heather and are going through like a multi-unit type of strategy where you want maybe 3 locations. So if you're on maybe your third location and you've been able to have that track record and operate your multiple units successfully, then the banks will see, okay, they have that track record, and maybe we're going to be a little bit more comfortable to have alternative loan options versus just SBA. But if you're a first-time business owner, like most folks that we work with are, and this is a new experience for them, typically SBA loans are going to be the most appropriate product for you in terms of financing. We talked about these loans going up to $5 million in value. We are finding today that the minimum loan amount is $100,000. But no worries if for some reason the business that you're looking at or the loan financing that you do need is below 100. We do have other financing resources, or maybe the rollover program might be a better fit, but we can always do a brainstorming session to make sure we accomplish the needs and the amount that you need for funding. One of the things here at FranFun is we actually help folks through a loan consultation service. I would say most folks that we work with, and we work with Heather on, this is their first time. They've never done this before. So we provide that consultative approach, just like Heather does with her process. And so our goal is to have our full-time efforts to help you obtain a business loan through our banking relationships, but also to help you with the paperwork that's going to be involved to really make sure that it's exactly what the banks are going to want to see. We do have a 99% success rate when it comes to helping folks obtain their loans. And I think it's because our team does a really good job really helping you navigate through not only matching you with the banks that are funding franchises and the brands that Heather is working with, but also through like projections, budgets. We can provide you with a business plan template, really everything that a bank's going to want to see to get your loan across the finish line. So I know Heather mentioned initially in our introductions, there's some exciting incentives that are happening today. So we'll get you all up to speed what that means and what's out there. So you may or may not have heard, but through the last year, through the Economic Aid Act, it was signed into law, and it provided some level of assistance to individuals, families, businesses that were affected by the pandemic. The legislation includes an extension of the Small Business Administration actually covering monthly loan payments for new business loans. Initially, it was 6 months for last year. This year they did 3 months for any eligible borrowers. So if for any new loans that are approved by September 30th of this year, the SBA will cover your first 3 months. This is not a deferral, but one of the things that I really wanted to focus on is the term approved. What does that mean? So it doesn't mean that a bank's going to say, yes, we are moving forward with your loan and we want this loan. Approved is really a date that your loan is assigned what's called an SBA loan number. And this loan number is going to be when your loan is essentially closer to actually being closed and the bank is actually going to release the money itself. So that's something to definitely keep in mind, that if this is an incentive that you do want to definitely take advantage of, and you're working through your process with Heather, and an SBA loan is definitely something that you feel is a good fit for you, you definitely want to start the process sooner rather than later. Another incentive here in this second bullet point is that the SBA is going to waive their guarantee fee. So what that means is that traditionally, the SBA would charge you as a borrower a fee for providing that guarantee to certain banks to provide this loan option to entrepreneurs, which is usually a 2 to 3% range on the back end. And that SBA guarantee fee is being waived for any loans that are approved by September 30th. So when you really think about what a 2 to 3% is of a loan amount, that's actually a significant cost savings for you on the back end. The third bullet point here is that the SBA has increased their guarantee from 75 to 90%. So this does not necessarily change the loan parameters, qualifications, or requirements for you as a borrower. But essentially what this increase of a guarantee does, it should really incentivize those banks that haven't been writing loans to business owners for startups recently. So I feel like the reason why they put this in place is to incentivize these banks to provide these loan options to entrepreneurs, because there would be less risk associated with it because the SBA is going to guarantee more of it. So I know we get that question a lot about it, but those are the top 3 main things that are happening right now. And of course, too, if anything else comes up, we'll definitely keep Heather apprised of that, and I'm sure she'll keep you all up to date. When it comes to SBA loans, I really wanted to focus on the 2 most popular SBA loan products that banks are working with today. The first one is going to be an SBA 7A loan product. And this SBA 7A loan product is specifically for a business that will require some type of build out or construction. So maybe you're working with Heather on a restaurant or a gym or a nail salon or a childcare center. So anytime that you have any build out, construction, it typically falls into this product. And the other thing to know that is the minimum loan amount for this loan product is $200,000. So of course, if it's anything less than that, or you feel like that's too much for you to borrow, which typically won't be the case for a brick and mortar type of concept, then we can always look at another alternative solution. But let's talk about the requirements. What banks are looking for you to achieve this type of loan product. The first category here in blue is credit. 680 and above is typically a bank's comfortable with a 680 and above credit score. We know life happens. So if you've had any bankruptcies, foreclosures, resales, short sales, banks do prefer it to be less than 5 years old and that you've had favorable credit history since that event. The next qualification here is that banks want to see that you as a borrower are putting some of your own cash towards the business and putting some of your own skin in the game. And based on the SBA regulations, they're not going to fully fund your business. And typically it's going to be a percentage of your total project cost. And what we'll typically find here could be anywhere from 15 to 20%. It could go up to 30. It just really depends on the loan amount, the industry, and your personal financial situation, depending on where you fall into that percentage. So let's talk about an example. Let's just say you work with Heather and you've done your research and now you're excited about a business that is $400,000. So if you have to bring 20 to 30% of your own cash towards the project, that means you're ultimately going to need to feel comfortable of putting anywhere from $80,000 to $120,000 of your own cash on business expenses. And then the SBA loan will cover the remainder of your project. So that was just a brief example there. But I would definitely expect if you're looking at a project this size, you're going to have to put some skin in the game. And there's some different ways, maybe it's utilizing the Fran plan that we talked about as your cash injection. One of the things too is that if you are looking at a franchise with Heather, one of the first expenses that you'll commonly hear is an initial franchise fee. And that initial franchise fee is typically something that you pay to a franchisor to secure your territory, get your foot in the door. And if you pay that out of pocket or with the Fran plan we talked about, that actually will count towards that cash injection percentage. And then you can utilize that SBA loan for build out, construction, equipment, the bigger part of the project. The next qualification here in green is that typically with this SBA loan product, the bank is going to want to see some additional security. They're conservative in nature, So they are going to want to see the collateral being fulfilled. Now, there's some ways to fulfill this requirement. One of the ways would be, say, equity that you would have in real estate. And what that would look like is a bank would place a lien on the home, but it would fall secondary against your mortgage. So let's just say, for example, if there was ever a default, you sold that property in the future, then those proceeds would just need to go towards paying that loan back. So that is definitely worst case scenario. Also too, if you don't own a home, which a lot of folks don't, then there's other ways to fulfill this requirement. Maybe there's an assignment on a mutual fund account that they could put on, or an assignment on a life insurance policy. So again, that's why we understand everyone's situation is unique. And that's why we would have a more one-on-one conversation to see what that looks like for you and your situation. The last category here is, again, banks are conservative, but they also have your best interests at heart. They do want to make sure that you're in a good financial position during your first year as that franchisee, especially for the first 12 months. So this is something called your burn rate. And one of the questions that is asked is, during your first year of starting the business, if you personally cannot contribute to, say, your loan payment, the lease payment, your personal living expenses, and of course, the bank doesn't expect you to find yourself in this position, but if for some reason you couldn't, would you have other resources to step in and make sure these expenses are paid during your first 12 months? So that could be fulfilled either through other cash resources, reserves. Maybe it's outside income coming from you or a spouse or a rental property you have. But either way, this monthly burn rate is calculated just to make sure that you're in a good financial position during those first 12 months. And if you did have to personally step in to cover those major expenses that you'll have, you have additional resources to do so. A question we get all the time is, what are the interest rates? What are the terms? Typically, you're going to see a 7 to 10 year term with no prepayment penalty. And what's really awesome to see is most folks that we work with don't even fulfill their term. They pay these loans as soon as possible once they get their businesses off the ground, which is the ultimate goal, right? When it comes to interest rates are based on prime plus 2 to 2.75%. The prime rate today is 3.25. The 2 to 2.75 is what's called a bank's internal bank rate. So if you add prime plus the 2 to 2.75, you're going to commonly hear and see that SBA loan interest rates are 5.25% to 6% with that 7 to 10 year term, no prepayment penalty. So as I mentioned on the last slide, there's two funding SBA loan products that I really wanted to talk about because they're essentially the most popular. This one is called an SBA Express loan. And this project is, like we talked about how this the SBA, the other slide, was good for build out construction. So this product is the exact opposite. It is good for more service-based or home-based type of franchises. So maybe you're working with Heather with something that is a cleaning company, handyman service, home care business, or something that you can do out of your home where there's no heavy build out or construction involved. The maximum borrowing amount is $150,000 for this program. So if you do need more than that, then that's maybe we'll consider switching you to the other loan product. But the maximum is $150,000 for this loan. The requirements here are, some of them are the same, some of them are different. So I'm just going to only address the one that, or actually the two that are slightly different. And that is post-closing liquidity. And the SBA Express banks that are out there today really want to see that after your loan closes, that you have not only the ability to make sure you can step in and make sure that your main expenses are covered during your first year, but they also want to see that you have a certain amount of funds that are liquid, that are available. And typically what we hear is $50,000 in post-closing liquidity. So it doesn't mean that you have to put the $50,000 towards this business, but it just essentially means that you have $50,000 liquid available as just a cushion, safety net. Another thing that you may notice here is the equity injection is a lower because it will require less skin in the game from you as a borrower, just because it is going to most likely be a lower project cost, of course. But really what I always tell folks, just to be conservative, is you really want to think about this 10% as a minimum. And the reason being is because let's just say we fast forward a little bit to the future. Again, you found a business with Heather that you want to move forward with. You applied for your loan, you've been approved. But before the bank lends you money, they're going to also hand you what's called an SBA loan closing checklist. And you are going to be responsible as a borrower to knock out these items on this SBA loan closing checklist. And some of the items on this checklist will cost you money. Any licensing, any training, getting your operating entity set up, LLC, S Corp, C Corp. But one of the bigger items, if it is a franchise, is an executed franchise agreement. And that is the agreement that you need to execute in order for you to get your foot in the door and become a franchisee. And that franchise agreement typically will cost you something of some sort. So that will need to be completed. So that's why I always tell folks, you really want to think about this 10% as a minimum, because by the time you get the loan and you've completed that checklist, it could exceed that 10% amount. Another nugget that I wanted to provide you both is, so with this loan product specifically, even if it is typically more for a service-based business, that probably will require some type of vehicle that you would have. So maybe it's a handyman service and you have a work truck. Well, with this program, actually, you cannot include the cost of the vehicle. So you would either need to work with the franchisor to assist with some type of third-party financing, or we have those resources as well, or you might have to self-fund the vehicle. Now, with the 7A product that we talked with before, you can actually include the cost of the vehicle in it. So those are some two major differences there. And again, if depending on the franchises that you're looking at, we can always revisit that topic. But I just wanted to give you that little nugget because it is a question we get pretty often. Interest rates and terms, pretty much identical to a 7A. You're going to see probably about a 5.25% to 6% with a 7 to 10 year term, no prepayment penalty. Another question we get is timing. So how long is this going to all take me? So as you can see here, we have a little timeline chart. With the SBA Express loan, even though it's, a smaller loan product, doesn't require any build out or construction, there are additional steps that need to be taken there, but either loan product we can see is about a 45-day process. However, the one thing that I do want to mention is that if for something like an SBA 7A, an SBA bank is not going to have your loan go into closing for you to get funded until you secure that lease or location. Because again, this loan product is specifically tailored for brick and mortar franchises. So they don't want you to have a loan when you don't even have a location yet. So that definitely can impact that timing if you're still searching for that location. Also too, with this timing, right now we are not in typical times. So with not being in typical times, it wouldn't be surprising to see some of this timing get delayed on the bank level, because there are a couple of things that are happening. There's the incentives that we talked on earlier on our slide. So a lot of folks are excited about it. So they're receiving a lot of a high volume of inquiries for that. There also was another second round of what's called PPP loans. And in PPP loans were for existing business owners to provide them relief during the pandemic. And these loans that for startups are the same banks that are helping folks with PPP loans, but also providing these same incentives. So I say, you know what, 45 days, is how it used to be. But again, we're not in typical times. So we never want to overpromise, underdeliver. And so if your process does take longer than 45 days, is because of today's environment we are living in. But this can kind of give you a general idea what that timing would look like. So before you make any big decisions in your life, I think one of the things is getting pre-qualified. So probably when you bought a house or bought a car, you went through a pre-approval process. So same idea, but for a business. So Fran Fund, we do provide a free pre-approval process where we're able to really understand and determine what your borrowing power is and what your options are. So, you don't want to get excited about a business that Heather has presented to you and are like, oh, shoot, I can't pre-qualify, or there's some things that I need to do to get there. And that's what we're here for. We're here to work together as a team and really help you formulate a funding strategy that is going to be something that you're confident in moving forward with. If all goes well and you go through our pre-approval, we will provide you with a pre-approval letter in writing that you can show to the franchisors you will be investigating through Heather's process. Another question we get is, well, why don't I just go to my local bank? And you know what? Some people do have relationships with local banks, and that's great. But banks are not treated equally. Some banks don't, know franchising, or they don't specialize in small business loans, or they may say they do, and they just don't really have that type of, bandwidth or whatever it may be. So I think the biggest thing here is that, yes, you can go to your bank. They might tell you yes, but really, what does that yes mean? With Fran Fund, because we do have relationships with the top SBA banks across the country who are okay with first-time business owners, who are well-versed with the different franchise brands that are out there, and that we do specialize in the franchising process. That's how we're able to get that 99% success rate and giving you the confidence to continue forward, because we do a lot of that groundwork of already giving you the resources that you need, not only from the bank level, but from the administrative level as well.
Can I just add something here? Because
Sure.
it's not just getting approved, it's getting approved with terms that you are okay with. And I'm sure you guys are okay with somebody doing both, going through the process with you guys and going to their bank and seeing who gives them a better deal. In my experience, the outcomes, the offers that you guys get are much more attractive than the ones that people get from their own banks, because the bank, for example, could say, okay, we're willing to give you this loan, but you have to freeze $100,000 of your own assets. You can't touch that money at all. And, my clients are going, but I need money. I need money to live off of. I need money for my business. So the terms, it's not just the rate, but the terms are also very, very important.
Yeah, that's a really good point, Heather. And I can't agree with her more. And I think that, that's where folks like us who have been in franchising and who understand this process, it just might be the same if you go to your local bank. So yeah, I definitely agree with that comment for sure. Thanks, Heather. Just a little bit about the process. So typically when you work with Heather, she's going to go through her awesome, assessment, really matching you up with some different great business opportunities. But when it comes to the funding piece, what will happen is we'll provide you unlimited consultation and explore your options. Typically, the first call is very educational, introductory, kind of like what we're doing here. Really brainstorming some different ways you can fund a business, whether that's something Fran Fund directly can assist you with or not. But we can definitely help you point in the right direction, or at least give you the information you need to get there. Number two is we determine, what funding strategy you should consider or explore further. The third is, if it so happens to be a Fran Fund service, we'll get you into that free pre-approval, get you understanding of what loan options are available with our extensive banking network. Or if the rollover program is definitely something that you feel is a good fit, we can get you all situated and discuss timeline, next steps. And of course, our goal is the same as yours, and that's to get you the funding that you need so you can fulfill your dream as being a franchisee and business owner.
Yeah, and one more quick thing, I don't want to steal your thunder, but one of the reasons that I like working with Christine, there are some other companies too that I've referred people to, but Fran Fund and the top companies are just as willing to tell you that you there's a better way for you to do this, that you don't need them. They're not trying to get you into a product just the same way that FranNet's never trying to get you into a franchise. They're very even-handed, and they're just as happy to say, go get a home equity line of credit. That's going to be your best course. So I like that about them. They're really very good consultants. They're going to tell you the right thing to do, not the thing that makes them the most money.
Well, I second that, Heather, and I completely agree. And that's why we work so well together, because Heather's the same way. We all have your best interests at heart. So, really that's all for me today. And I do thank you all for, taking some time to listen about some different funding. I know the funding topic is not the most exciting thing, but it's definitely an essential piece of the process of being a franchise owner. So Heather, I'm going to turn it back to you, whether you want to do questions.
Well, you have a couple of questions. Yeah, there are a couple of questions here that
Okay.
people have typed in. The first one does, for the business loan, do they run personal credit in order for it to get approved? I think you answered that, but maybe just.
No, it's okay. Yeah, I'd be happy to answer that. And that's a great question. So initially, when you go through a pre-approval process, we're going to do a soft pull, not a hard pull. And the reason being is because we want your credit to be as attractive as possible. When we present your loan request to our banks, we want you to look like the best you can look. Now, the only time you're going to receive a hard inquiry is when you're pretty far along in the loan process, where the bank's going to say, okay, let's just do one hard credit check, get your permission before your loan closes, just to make sure we're all good there. So I wouldn't worry about having a conversation with me and I'm going to just start running your credit. That's really not what we want to do. So it's only a soft pull for a pre-approval, but I would expect a hard check before your loan goes into closing for you to get funded.
Okay, great. Another question is, and you addressed some of this, but there's more. How long does the SBA process take in general? I realize that there are different loan programs, but just as a general timeline. And the concern is that there's this September 30th deadline in order to get these incentives. Is that even possible to reach, given that it's only 4 months away?
Sure. Well, I would say that to answer that question, like we talked about, it typically could be about a 45-day process, but we are not in typical times. Banks are experiencing high volume, so it is definitely a lot longer than we have seen before. And again, if you are looking at a brick and mortar type of business and you're looking to find the location, your loan is not going to go into closing for you to get funded also till you've secured that lease or location. So it does really depend on that situation. My hope is for anybody that does go through the process does get their first 3 months, but also too, we don't want to overpromise and underdeliver. And my biggest thing is, I wouldn't rush through this process just trying to get the 3 months, because then you don't want to be disappointed if you don't get it because of timing. So I would say just, trust Heather's process, go on your own timing, and not just, and if you get the 3 months, fantastic. If not, then it's not something that you don't want to rush through or try to make these decisions just trying to get the 3 months and then be let down. That's my personal opinion. I don't know, Heather, what do you think about that?
I mean, getting into the wrong business is going to cause a lot more problems for you than having to pay some additional loan payments or loan fees. So, I mean, if you know you want to do something and you're on the right track, or you get on the right track in the next 4 weeks, 6 weeks or so, yeah, it sounds like it could be feasible. But don't put, what do they say? Don't let the tail wag the dog.
Yes, exactly. I think that's what I was trying to get, but I couldn't remember that terminology.
Yeah, exactly. I don't see any more questions. I'll give it a couple of more minutes. We've got just a little bit more time left. I mean, one thing you talked about in terms of the rollover, I just want to say this program, a lot of you probably haven't heard of that program. It's been around for, what would you
1974.
Say? Since 1974. It's not new. It's not some slick thing that anyone's trying to do. It's been around since 1974. I personally have had dozens of clients go through it, never have a problem. The companies, the biggest funding companies in the world offer this program. And they are, very careful to make sure that the government understands what it does and doesn't change the laws to make it not work. It's been working and not questioned since 1974. So just so you know, and the one thing that I've heard in some other presentations is that Christine didn't have a chance to mention is that when you roll over those funds, not only do you get to use all of those funds, so you don't have taxes taken out, penalties taken out. You can use all the funds that you have in the accounts, but you can actually, because you actually end up owning the stock to you purchase stock shares. You could actually then sell the stock back to your own company and ultimately put money back into those accounts. And people, I've had clients that have done that and have put more money back into their retirement accounts than the law would have allowed them to put in there, because you can't just put unlimited funds into retirement accounts. So what I'm saying is some people actually, and I'm not a CPA, but this is something that all of these companies will tell you that people have done, and I've had clients do that. Some people will use it as a what would you call that, a tax strategy tool in order to avoid having to pay some of the capital gains tax when you're getting ready to sell your business.
Yeah. And I definitely agree with Heather. And that is definitely more of the detail we do get into during a one-on-one, but thanks for adding that. And to piggyback on what Heather had said, it's also a way to diversify how your retirement funds are being invested. So if you want, a portion to be on the open market, say in a Fidelity account and IRA, you're essentially just taking a portion and investing into yourself. And kind of use that example, just like if you invested in Google or Apple stock, as your business starts generating revenue, so will that initial investment. So just like what Heather said, when all is said and done and we roll those funds back into that traditional IRA it came from in the first place, or whatever account it is, potentially could double or triple that investment because your business was profitable and did well. So it is a very popular funding strategy. It's probably our most popular funding strategy that we have, whether it's you utilize it in combination with a loan or to fully fund your business. So definitely something, if that is applicable, something I would suggest you highly consider.
Yeah, for the right person. So I don't see any other questions. I guess I'll just close by saying, first, thank you, but also, do take advantage of the free consultative service that Christine offers. Let her tell you what your options are. You might not know what the business is just yet, but she could at least take a look at what kind of assets you have to work with and what kinds of businesses you're looking at, whether it's retail or service, and maybe give you an opinion on both. If you go retail, the retail route, you might look at something like this. If you go service, look like this. But I think it's really important to know kind of early on what the next steps would be, because of the fact that you might want to try to qualify for this SBA incentive, or if you're doing a rollover, that process also takes 2 to 3 weeks, and you might want to get your business going sooner rather than later to take advantage of some other kind of incentive or a great piece of property becoming available. And so you want to have kind of the tools in place and a strategy in place to know what you're going to do once you find that perfect business. So, and Christine has talked to, numerous clients over the years. They all love her. It's all gone smoothly. She's a great communicator. You'll know exactly, step by step what to do next.
Yes. And I can say the same thing about Heather. So thank you so much for the opportunity today.
Yeah. All right, everyone. Well, have a good afternoon, and we'll see you soon. Take care.